Any other ETFs that you could publicly state that are coming out?
What we're looking at right now is the next one is probably going to be a Palantir ETF with put spreads. So, access to Palantir, all the upside, no capped upside, and again, a nice yield. And then probably the next one after that is going to be Ono. That's going to be my no bleed tail risk. That's my baby. That I've been working on this for a long time, and we are hopefully 60 days away, maybe.
What does that mean though? No bleed tail risk. What does that mean to you if you were to, because like most people have never heard that term before. What does that mean?
So what that means is, and go back to 2008. 2008, people got crushed in the market, and this whole kind of tail risk protection idea became popular. But the problem is, all right, you buy, let's say volatility, and 99% of the time volatility is going down. So you're bleeding. You're losing money on your tail risk protection day after day, month after month, to the point where you finally just say, you know what, I can't take it anymore. And I heard a story that right before the COVID crash, there were like a bunch of pension funds that pulled the plug on their tail risk. So they're like, we're losing money every single year. We're out. And then the market goes down 30%. So what Ono is going to be designed to do is when the market is going up, which it is, again, 99% of the time, we want to be like flat, down 1%, up 1%. When the market's down like 2%, yeah, we're not, maybe we're going to be up a little bit, but we're not going to be up 2%. But if the market's down 30, the plan is we want to be up a lot. That's the idea. So you can buy it, put it in your portfolio, hold on to it. The 99% of the time the market's going up, we're not going to kill you. It's hopefully it's going to be flat, up a little, down a little, but then it's going to be there for that Liberation Day sell-off, COVID sell-off, 2008 sell-off, which, you don't see coming. That's why I'm so excited about it.
Is it kind of similar to like a managed futures ETF where you actually benefit in turmoil?
No. So managed futures can have tail risk aspects to it, but you're relying on that managed futures manager to catch those trends and to catch those trends at the right time. If you've got a quick sell-off, like, if I've got a managed futures fund and all of a sudden, Trump comes out and says, hey, you know what? I'm just going to nuke the Middle East and oil spikes to $500 a barrel. Your managed futures fund probably is not going to help you because it was not positioned that way. Ono is always going to be positioned for tail risk protection. That's going to be the big difference. Also, a managed futures fund, when it's positioned wrong, it's going to hurt you a lot, which is why managed futures funds have had issues. Coming out of 2008, they killed it, and then they stunk for, the next 10 years, and people got rid of them.
What about the wheel? You guys had a wheel ETF that was coming up.
Yeah, we filed for that. We may do that one as well. I love the wheel strategy. We'll see. The problem with the wheel strategy is it's going to require a lot of education because most people, aren't guys like you and me who trade options. They don't know what the wheel strategy is. They don't understand the advantages, and it's going to look and smell different than anything else out there. Like, if I buy space stocks and have put spreads, that's going to look, space is up, we're up. You get. I don't have to educate you a lot. I just have to explain why put spreads versus call spreads. The wheel strategy is going to require some hand holding and some education because the return stream is just going to look different.
So another webinar, another couple webinars. It sounds like
without a doubt. It's just we're doing a lot right now. A lot of you. I mean, I've got like 70 ETFs. Only so many webinars we can do, but we'll definitely get to that.